All right, hey there. Good morning, everybody. Christopher Inkswood, Texas West Capital. It is just after 11 a.m. Central Standard Time here on Tuesday, December the 6th, 2022. 19 days till Christmas, guys, if you celebrate that. Oh my gosh. I just coming on down, right? I don't know about you, but I am far behind in all that with the... Man, we've just done so much. Whoa, sorry about that, guys. We've just done so much, man, oh man, over the last few months, man. From Vegas to starting to, make my way onto more and more shows. I was on Scott's show this morning with KJ there. If you guys tuned in for that, if not, you can go to Scott Milker's channel there and see the replay on it. We talked about some alts and general ideas about markets, movements, and structures and stuff like that. As I said on there, guys, and you know what? Those of you that follow me consistently, I know you know this, but we always get new people coming in, and I just want to make it clear, absolutely nobody knows for sure what is going to happen. I don't care how loudly they talk about it. I don't care how much they promise you. If they happen to get it right, it is what it is. But it's not like anybody has a crystal ball, okay? Excuse me. And I think the problem with that for new traders is that new traders get scared then. So you get into a bear market like we've been, right? Like so far for Bitcoin, the all-time high was in November of 21 of last year, right? The lowest low since then was last month, November. It's 12 months. Exactly, right? As I continue to teach you guys and talk about, bottoms and tops are processes. They're ranges. They're things that happen over time. New traders often think it's the absolute highest or absolute lowest price, but those are events, okay? At the tops, it's a process that happens over time. It's distribution, right? Those that are heavy accumulators previously are then selling to retail, who tends to jump in toward the end there, right? In accumulation, it's those times when retail in the market swears up and down. And I don't care if somebody's got 500,000 followers or 1 million followers on some social media platform, guys. Retail is retail, okay? And what happens is they often miss the bottoms as well because they're just like, they're just like you and me. They're human, right? When you get to the lows, like when you're at the highs, everybody swears up and down. It can't possibly stop. Laser eyes, diamond hands, all that nonsense, right? And then when you get to the lows, oh my God, contagion, and man, so many things are going to break down now, and we're just going to keep on tumbling. But the thing is, there's no guarantee that's going to happen. So there are things that we look for when a bottom may be forming, and I've posted these things on Twitter, right? I've looked at price action and volume comparisons, and I've explained what they mean a little bit. These are things that we go in great detail at TWC, right? So I guess what I'm trying to say is a lot of new traders or traders, just not consistently profitable traders, they tend to miss selling at the top or buying at the bottom because they become so, at the top, they're scared of missing further upside. At the bottom, they're scared of getting in and it going lower. And that has to do with two things. One is you don't understand how markets move, how and why markets move, right? And two is you either don't know or are not using proper risk management, right? So you have oversized positions, which are then scary. Yeah, you don't have proper stop losses. You you maybe don't know where to put stop losses. What makes sense, right? And so that's a really scary thing if you're a trader. And unfortunately, what it means is you then miss these opportunities to trade, even if it's to go lower, guys. There's been great movement up. There's been a lot of money to be made. Same thing as after June, right? So many people refused to trade long on that, because the larger time frame, right? But, if you're a trader, then you're looking for higher confidence entries. You're looking for opportunities to get in, because what scared money makes no money, right? Time itself is going to punish you for not getting in earlier, right? Time rewards those who get in early, right? Fast. So the faster money moves, the more money that you can make off that, right? So anyway, yeah, I just want to talk about it because I don't want people to think that, when we talk about bottoms or whatever, we're saying, oh yeah, it's definitely and there's no thing. Even though I say that time and time again, I still get people who say, oh, you were so wrong. I can't believe I just did that voice. But seriously, it's like, you know, and you can sit there and you can point out, listen, you're not paying attention, and they don't want to listen. They don't want to listen, right? And it is what it is. You know, if you've been following me, you know I've never guaranteed a top. I've never guaranteed a bottom. I've said this is what I think's happening and this is why, but this is what we need to see happen now. These are the steps that need to happen. And if instead these other steps happen, then that means it's not correct. Remember, guys, at the end of the day, do you want to be right or do you want to be profitable? We would all love to be right and profitable, but very few are consistently, right? Me personally, if I had to choose, I would be wrong every single trade as long as it meant that I could make money. Now, what does that mean? That means that I would recognize, because new information comes in, and I'm not holding so steadfastly to that, I would recognize new information coming in and get out of my losing position and get into a winning position. Does that make sense, guys? I'm throwing a lot here at once, but, you know, this is the stuff. This is what separates consistently profitable traders and everybody else. And there's very few in the grand scheme of things. For the number of participants in the market, there's very few actual consistently profitable traders. You cannot do this for 5 years, 10 years, 20 years, 30 years if you don't figure this out. Okay? And it's hard because a lot of big accounts on social media don't really understand what they're talking about. There's a lot of good stuff out there. I'm not going to lie, guys. Yeah, there's a lot of good stuff out there. And sometimes it's even with the bigger accounts. But a lot of times, you know, you go in there and you look for that bias. You say, oh, they got, you know, 500,000 followers or 200,000 followers, so they must know what they're talking about. And a lot of times, guys, they don't. So you got to be careful when you're out there, okay? But these things I've talked about right now, these are the important things. Risk management, single most important thing you'll ever do as a trader day in and day out. I posted an article there on Twitter, if you guys saw it, about Caroline. She had something like a $1.3 billion in the hole. 1.3 billion with a B. Now, if that shouldn't surprise you, right? Not too long back, a few months back, we saw the video of her saying, yeah, you know, we don't really believe in stop losses. It doesn't work with the way that we trade. $1.3 billion in the hole, something like around May of this year. Risk management is where it's at, guys. I'm going to shout that until you guys get that in you, because I would not be where I'm at today. I would not have been able to do this for, you know, since 95. So was that, 27 years, going on 28 years? If that wasn't true, or, you know, if I didn't do that risk management, okay? So it's, to me, whether it's through us or anybody else, learn proper risk management, all right? By the way, guys, you can join us here. We've got a holiday sale going on we're about to launch our LMT Mentor program. That'll launch on December 28th. You can get in there. Again, we've got a special on this. So you can get here. If you just go to, let me go ahead and put it here, guys. If you're interested in checking it out, go to howtotrade/cyber-holiday-sale. And that'll take you to a page where you can opt in with your email address. We don't spam you guys or anything like that. It's just if we're going to change something on here, you know, I want to be able to let you know because you're not going to come in here and look at this every day, I don't think. But then it'll take you to this page right here, and you can go in there and check it out, guys. By the way, I am offering myself financing on this. I'm also working to get a actual financing partner in here. You know, with myself, I don't do a credit check. I don't do a job check. I don't do any kind of check, right? So I'm taking all that risk on me. But I'm going to offer a partner in here that's going to be able to, they're a professional financing company. They got rates down as low as 5.6 or 5.7%. And they work with all types of credit. And here's the thing. Here's the crazy thing. You know, they're going to check your credit and your job, but you don't have to have like perfect credit or anything like that. But if we get like beyond a certain level every month, they're going to guarantee financing for everybody. So at least here in the US people. So like I said, if you're outside the US, you need financing, we've got options there. But you can check that out, guys. There's a whole bunch of stuff that's going to be in there. Everybody, so far, it seems like everybody that's joining is real excited about learning my day trading system. It is an amazing system, guys. Every day, it's able to find you trades, right? Profitable trades, right? But I'm going to tell you, the biggest part I think about this is going to be everything that you learn in terms of trading psychology, market psychology, how and why markets move the way they do. And it's going to give you this bigger understanding. So that way, when you come to tops and bottoms, you start understanding what you're looking for and why. And it's not just, listen, it's going to look like this. We talk about how it happens. Why is it happening? What's going on with the market and market participants? How does that play into the bigger things? If you guys have been following me since 2018, I've been doing this on YouTube, I think, since 2018, right? I have been wrong with the interest rates one time, and that was this fall. I thought we were going to get the move down to 50 basis point hike, at the beginning of Q4, so that would have been October. I'm off. But remember, I talked about it in January. I said by the summer, we're going to have 75 basis point hikes, potentially even up to 100 through the summer. And then it was like at the end of Q3, beginning of Q4 is when we were going to potentially see that pull back. But every other time, I got you on QT exactly November, right, of the year, right? Exactly. And I did that in, what was that, April or May of the year. Coming up into 2020, coming during that period up into there, the Fed was very vehemently, we're not going to, lower interest rates. We're not going to do it, blah, blah, blah. And I said, sure you are. They're like, oh, we're going to raise it 5 times. No, I said, you're going to actually drop it this many times. And it did, right? So that understanding there has a lot to do with understanding how markets work and how that other information interplays. The goal is to basically get you guys profitable. And again, guys, I'm going to tell you, I'm doing this. It's not because I'm a nice guy, okay? I'm doing this because I have other plans. I have larger plans. We've got a few funds that we're going to be setting up this year, real estate and otherwise. I'm looking for people that can invest in that stuff, right, over the next few years. If I can show you a way to be profitable as a trader where you've got extra money, you may be interested in getting involved. I'm being outright honest with you guys, right? That's part of my end goal right there. So, not that you have to, obviously, but the odds are, if I go out here and I show you how to do this and you do it and it works and you're profitable, then the odds are you're going to be open and willing to potentially invest in other things, make more money with me, right? And in the U.S., there are laws about the way that we can approach people. So if I can build a base of people who are able to invest, then it helps me and my partners out a lot. And, of course, you making money there. So, again, I know you get a lot of people on there. Their sole way of making income is whatever they're trying to teach or whatever they're trying to push there. Again, I'm a trader. My money comes from that. Yes, we make money here, but I have people to pay, right? Can't do it for free. I've got people who work for me that need to get paid. But all that is for a larger goal, guys. It is for a larger goal. But anyway, whole bunch of stuff in here. I've got a couple of books coming out next year. You're going to get free copies of those. And other stuff going on. So check it out there, guys. Just, man, you don't have to do it. Just check it out. We'd love to have you there, guys. I think we have so much fun. People take trading way too serious, I think. And it's just, again, I think it's a lot of fear of not really understanding what's going on there. Who's here already? Nevlusian, Bamboo, Hank, what's going on, guys? Excelsior, hey, what's up, man? Ain't seen you talk in a while. Fiboswani checking in. Man, I had a great conversation with Mr. Fiboswani there on Sunday. Zoom call, man. What a great guy. What a great guy. Man, him and I, we look at markets in general just the same way. And so, if you like me and the way that I look at markets, man, you guys give him a follow there on Twitter. Absolutely fantastic guy. Really nice guy, too. And, I think it's one of those other things. A lot of people get on social media today and they think they have to be rude and just stupid and act really just dumb, right? To get people to follow them and whatnot. And, man, there's very few of them out there, like Mr. Fiboswani, who are just genuinely nice people. So there you go. Yeah, definitely. Data, what's up? Andrew Bennett, name Mr. Wilkes. Dancer Eddie, what's up, man? Checking in from Tampa. I love that name coming in. Again, we've got my favorite movie, which is National Lampoon's Christmas Vacation. So every time I read Dancer Eddie, I think of you know who, right? Let me see here. I have a crystal ball. It's your infallible system. I wouldn't say it's a crystal ball. I mean, it's not 100%. Nothing's 100%, but damn, it's good. It's really, really much more profitable, and so easy to do, which is why I've never taught it to anybody. I always felt like being selfish, but again, at the end of the day, it's like, well, what are my goals overall? I really want to help people. That's one. I really want people to be successful because, again, for things that I want to do, there's some potential payoff there for me in the long run, right? And for them. So I was finally like, well, shoot, I guess we'll go ahead and do this. Let me see here. Data says, just last weekend it was wrong all over the place and I made money being wrong. All it took was admitting to facts and act based on them. Who cares if I'm wrong? I never did care. I'm not going to start now. Yeah, exactly. Again, guys, and I know especially if you're on social media, it's difficult because you go out there and you talk a lot and sometimes things look so right, like it's really going to happen. And so you're really positive about it out there online and then it doesn't happen and you're like, oh, it starts going the other way, right? And you're like, oh, man, I don't want to really admit I could be wrong here. Who cares, guys? Who cares what anybody else out there thinks? I get the nonsense all the time. I get idiots come in here who don't listen to what I actually say, right? Oh, you're always wrong. No, I'm not. I'm a trader. I say, here's what I think is going to happen. Here's what needs to happen in order to validate that. Here's what needs to happen in order to invalidate it. So if it does the invalidation, how am I wrong? Right? No, I mean, I'm wrong. My thought was it was going to do this, but by understanding the invalidation level and doing the other thing, looking toward that other target, I've always got another target lower or another target higher, right? I can get out of my trade, get out of a losing trade quickly, or not enter what may be a losing trade and instead enter, even if it's opposite of what I think, right? Here's the thing, guys. If I say, okay, look, let's look at this right here, okay? This is Bitcoin. Let me show you what I'm talking about. Let me close down some of this stuff here so we can see a little bit better here, okay? Here's what I mean about being wrong or being profitable, okay? I go here and I go, okay, it looks like maybe we've got something going on here and we're going to rally up, okay? So in order to do that, we have to get about, I don't know, let's just say it's this area right here, the 17,200. So that's going to be my validation level. If it gets through that, then that means I'm likely more right than wrong, okay? Doesn't guarantee I'm right, but I'm likely more right than wrong, right? And then we have another level, then you want to get the breakout here, right? Makes me even more possibly correct, right? Okay. But at the same time, I know that if we drop below, say, this swing low right here, right? This one right here at 1679 and 2 cents, or 16,791 and 2 cents. I know that if we do that instead, that is going to invalidate what I'm looking at because what I'm looking at is based on the structure as it stands, right? So if instead of going up there, if I don't break through that 17,200 level, right? Which, by the way, I'm not saying that's the level here. I'm just saying if that were the level. If I don't do that, if I get to 17,199 even, and then it turns around and gets rejected and drops below this swing low here, then I know there's no reason for me to have gone long. I didn't go through my validation level. And instead, I should go short because my thought is maybe if it goes through here, then we're coming down here to the S1 pivot. So I can short that down here. Now, I was wrong thinking it was going to rally higher, right? The new information that came in was the rejection prior to that validation level at 17,200, right? And then the confirmation of the invalidation through the drop through here. So that confirmed that I was wrong, thinking it was going to go up. But I was already aware that if it dropped through here, my target's down here, and I can short that down here. That is me trying to explain what I mean when I say, do you want to be right or do you want to be profitable? If it broke out about 17,200, right? Let's say it breaks out and rallies to 17,300 and then comes back and drops below the swing low here, hits the stop loss. Yeah, I'm wrong still, right? I lost $100. If it's a Bitcoin I'm trading there, right? 17,200 to 17,300, I lost $100, right? But then I entered a short with the target down here. Now this move, right, here is around $483. So that means I would be net positive $383. I was wrong, but profitable. You guys see what I'm talking about? If this is blowing your mind, let me know. Because most people don't normally think this way. They think, oh, especially if you're a new trader, they think, oh, it's got to be guarantees and all these, these things have to happen, right? Absolutes. New traders, you can always tell who is a new trader. And what I mean by a new trader is somebody who is not consistently profitable, because they will always hang around absolutes and guarantees. They will always, that's the number one thing in their head. And so if I can help you get through that with what I just did here and understand the difference between, between just holding on because you feel like you can't change your opinion, right? Even though new information is coming in, or being wrong and still being profitable, that should just blow your mind. That should just really set you up for looking at trading differently. And that's my goal here, guys. Here and what I do at TWC and what I do anywhere else online. That's always the goal, all right? So anyway, let me see here. Name Mr. Wilkes, what's up? Says Chris doesn't shill or talk bullocks like most Twitter crypto accounts. I don't. I'm very careful not to, I don't have anything to push. I will never accept somebody coming in and saying, hey, listen, if you can push our altcoin or something, we'll pay you all this. It's not worth it to me. Because even if I'm on the up and up, right, which I would be, but even doing that, it's still, there's going to be people out there that just can't wrap their heads around that because they're so used to being crapped on, right? That it's just bad. There's just no reason to get into that. I'm going to throw you charts on there. I'm going to look at ways. I'm going to try to explain why I think things are going to do what they were. I'm going to give you validation level. I'm going to give you invalidation level. I'm going to give you targets. Okay? But the goal at the end of the day, whether you are with TWC or whether you are just joining me here on these shows, is for you to learn something. It doesn't mean you have to agree with me. It just means I want you to understand why I think this. I'm giving you understandings of how we look to read the market. Now, just because we know how doesn't mean that we're going to get it right all the time. There's the other absolute, guys. You're never going to get it right 100% of the time. Never. You won't. I have talked to many thousands of traders, and many of them have talked to tens of thousands of traders, and nobody knows anybody that's ever gotten every trade correct. It's just not going to happen, guys. So I used to say things like, well, the only guarantee, there are no guarantees in trading, right? And then I saw Fibaswani mention one time, I think it was Fibaswani mentioned that there is a guarantee that you're going to lose money at some point. And he is correct. So I stand corrected. The only real guarantee in trading is that you will absolutely lose money at some point. So the important thing is to understand proper risk management and then to apply it religiously. Whether you're religious or not, apply it religiously. Do it all the time, guys. Because the one time you don't, you're going to end up $1.3 billion in the hole. Right? Woo, man, that's a lot of money lost. Let me see here. Brian Riley, what's up, man? Always good to see you. Dan, what's up, Dan? Amen, my man Fibaswani. Yeah, man, great guy. Dancer Eddie says his methodology is heavily based on Fibaswani's system. Good to know. What else we got here? Deadly123, what's up, man? He says we adapt as the information prints. That should be the goal, right, guys? And as always, guys, I'm going to take you from trading to real life. There is absolutely nothing different about trading than real life, okay? And so what Mr. Deadly123 there says, we adapt as the information prints. That should always be your goal as a trader and in life. Why? Because it means that you're going to be happier and more successful as a trader and in life. You got to, guys. You got to. You have to understand that downtimes are, they're abundant. They happen, but they're always limited, right? We have control over our future. We have control over the things we can do. We just have to decide, do we have that, that desire to do more? Do we have that desire to be successful? Do we believe in our ability to produce? You have to believe in that, guys. Because if you don't, how are you ever going to become a consistently profitable trader? You have to believe in your ability to affect change in your life. Otherwise, you're a victim. Everything always happens to you. The world happens to you. The markets will happen to you. And you will jump out and say, Wall Street stole my money. Whales stole my money. Somebody else stole my money. And you'll never take personal responsibility for things that happen there, which means you can never actually move on beyond that. Man, there's so much into the psychology of trading and psychology of markets, Man, the program, guys, is a year long. We are going to delve into that every week, 52 weeks. We're going to do that. You are going to become one heck of a changed individual by the time it's done. I'll tell you that. Brian Riley says social media doesn't wait for confirmation. Ain't that right? Hank says the good thing about knowing that you're wrong is that you found out what is probably right. Sure. Or at least you found out at least one way that's wrong that you've gotten out of the way now, right? Yeah, exactly. Takes discipline to be wrong and profitable. Emotions can take over, and then you lose. Yeah, that's why, again, guys, I posted, this tweet not too long ago about, one of the things that I wish I had known before I became a trader was how important systems are. Was how much more likely you are to lose if you treat every trade individually rather than using a system. Systems are rules based. It helps keep you from being emotional. It doesn't guarantee you won't that you won't be emotional, that you'll ignore the rules at some point. But when that happens, you have to take that responsibility. It has to be completely on you. You have to accept that so that you can change it in the future, so that you recognize that you did it, that it's nobody else's fault but your own, which means, guess what? You have control. You are reinforcing in your mind, man, guys, if you aren't getting anything out of this, you are not paying attention. The significance of admitting when you've made a wrong choice or a wrong decision or made a mistake is that it reinforces the reality that you have a choice, that you can change things, that you can do things differently. There is so much significance in that. That is going to really grasping that and taking that into heart is going to make your trading so much better, or at least give you the potential to make it so much better. There are other steps, obviously, but if you can't figure that out, you will not be a consistently profitable trader. There's just no way. GT, what's up, man? He says UVXY finally rolling up. Good day from Washington. I love it. All right, guys. So let's go in here. I hope you guys are excited. I hope you are, just kind of pumped up. Because you know what, guys? I've been doing this for a long time. I love the lifestyle. I love being a trader. But it does take things that most people, when they first start out, aren't willing to accept. People are not humble. They believe they know, just because they can trade, that they know what they're doing. Don't get caught in that trap. If you've been caught in that trap, recognize that you're caught in that trap. Get out of it, okay? All right. So here we go, because it does nothing to help you out. So here we are with the range, right? So we've talked about this range here. You can see that we are above. We are between the hourly pivot and the R1 pivot, right? This line coming down here is the 200 period MA here on the 4 hour. This is the 4 hour chart. This blue is a visualization of supply, right? This is supply. This is supply. This is supply. To me, this looks like accumulation. This large candle spread, large volume, in Wakofian terms, looks like a jump across the creek. The supply is the creek. This signals, if this is accumulation, this signals that it is complete and you are rallying up higher. Okay? So you get the jump across the creek, you rally up, you pull back up the edge of the creek, and then you rally up higher, new show of strength. Okay? So that's based on Wakofian logic, the way we look at the Wyckoff method. That's what I'm kind of expecting here. So I'm looking for a rally and a breakout higher here. Now, once you jump this, once this supply is overcome, it becomes demand and it becomes support, right? So I've got this drawn down here, but it probably actually looks more along the lines of this right here. You see where we're finding support? There we go. That's what it looks like right there, okay? And you notice it's right there at the top of the range, which is also the hourly pivot, which also has us on top of the high volume node, guys. What is the high volume node? That shows you where the market, the price levels. This is, okay, so this is volume by time, okay? If this is the 4 hour chart, that means each one of these volume sticks here is a 4 hour candle, okay? This is volume by price level. The importance, the significance of this type of volume here is that it shows you where the market is most interested. The larger the higher volume these nodes are, the more in the information you have on your chart. So in all this area here, right here, this looks like right around 16,555 or so. is the absolute most important level to the market. It is the place where the most trades happened at that price level in this period of time, this chart here. So from back here on, looks like October 31st, around 8 a.m. or so, to now, most transactions have happened at that level. Now, what does that mean? That does not mean that the market is bearish or bullish at that level. It just means that that the market overall has been most interested in that level. So by extension, if you are under that level, it's going to work as resistance. But if you can break out above it, it's going to work as support. Again, people in these areas are not inherently bullish or bearish, but if you're above it, they want to buy there. If you're below it, they want to sell there. So what it does is it adds an extra level of support or an extra level of resistance at those price levels. Doesn't mean you can't overcome them. Obviously, you can overcome them, right? But it means it's going to take a bit more work to do it, okay? So that's the significance of this VPVR here, of this volume by price level, okay? Does that make sense, guys? Let me see here. So right now, this is what we're looking at. So I've got the 200 MA on here for those of you folks, those folks of you that are really interested in moving averages. You want to see an impulsive breakout above this. Large candle spread, large spike of volume on the breakout here, and you want to see it generally remain above it. Kind of maybe it goes there and comes back and retests this support before it breaks out higher, okay? We're looking at this 18,140.62 level. That is this swing high right here after this low here, okay? That's the next area we really want to clear. And you'll notice right above it is this cluster of activity here, right? Which is why we stopped there, right? You've got this supply cluster right here. And so what you're looking for is an impulsive breakout that carries you above that. And if we're doing that, then we're looking up here around 20,077 or so. None of this guarantees that the bottom is in or that the lowest price has been reached. But what it does tell us, we're looking back here, right, is that maybe. Now this right here, again, is the 200 EMA. Did I have the 200 MA on the other one? Or was that 200 EMA? Wrong one. Let me see here. Oh, it was the 200 EMA. My bad. It wasn't the 200 MA, but 200 EMA, which the difference between the EMA and the MA is that the moving average, takes those, if it's a 200 MA, it takes the last 200 closes, right? And then it averages them. And that's how the line moves each time, right? So it's always moving forward one. The EMA has a formula that gives a little bit more weighted preference to the closer time frames than the further time frames. So that's the difference between them. But on here, let me see. Maybe it's on this other chart here. If you guys are following me on Twitter, you've already seen these charts. And should definitely be paying attention to them. Let me see here. Is it this one? No. Well, I can't find it at the moment, but let's jump here with this one. So I kind of posted this chart as well. I think I posted this one at one point. Let's take all this stuff down. Okay. And basically the idea is this is that same kind of chart here, right? Except showing that you've got a descending wedge here as well. You got a nice impulsive breakout through that wedge, which signals this is probably what it is, right? I've got a descending channel as well there with that EQ working obviously really, very obviously well as support and resistance, right? So this gives us a lot of significance in the idea that we broke out here. So big volume breakout here, big volume, big candle breakout here, finding support on here. And so what I'm looking for, again, is basically this move up, the pullback, the move up, pull back in 3, move up, and break on out higher. If this is the low, if this is, right, if that lowest point is in, then this is the expected price movement here. This is the expected price movement. Rally up to the R1 on the daily, pull back toward the pivot on the daily, and then breakout, head higher there, and a nice impulsive breakout above this stuff up here, right? But at the end of the day, guys, don't forget, this level right here, this is the Coinbase chart. So whatever chart you're looking at, whether it's, BTC, USDT on Binance or Bybit or whatever you're looking at, right? Femex, whatever. You're looking at this swing higher. This on Coinbase, it's 25,214 and 57 cents. That is the level you want to break. Why do you want to break that? Because as I pointed out before, we are in bearish market structure right now. High, low, lower high, lower low, lower high, lower low. This is the last lower high. If we break that, technically we will be out of bearish market structure. And of course, to get there, we will be in bullish market structure coming off the swing low. Again, that doesn't guarantee that the bottom is in, but it's another thing that we look for, right? And then we want to see some follow through on other stuff that we're doing. But that is the key level right there. Let me see here. Is this the, let me see. This is the 200 MA. Yes. So this is 200 MA on the daily here. Right now it's sitting right there around, right there around 21,300 or so. So, here's the other thing. On the daily here, you see how these are just big, large candles that come down real quick? We should see, and we're likely to see a similar movement on the breakout above the pivot here, a nice, big, easy rally up to the R1. Large candles. Doesn't have to be necessarily just two large candles, but large daily candles getting us up there to the R1 pivot. Or at least right here to, 19,261 or so. You can see that right here, we're sitting right here on top of this high volume node. But see this little low volume node here? No interest there. It's dipped down, brought back up, fell right through it. The market's not interested in this area. And usually what happens is that's a magnet that sucks price up. And so again, should get an easy move up at least to the 19.2 here, right? Rally up, pull back, rally up, pull back, breakout. So it gets up to this R1 pivot, hits that 200 MA on the daily there, pulls back, gains some more support at the previous areas of resistance here, and breaks out impulsively above it, which then carries it through this area here. Okay? That's what I'm looking for. That's why. As far as the weekly goes, weekly 200. And guys, this is based on Coinbase here, so it may be a little bit different, say, on an exchange that has longer time frames, right? But it shouldn't. Well, what's 200 weeks? 4 years? Yeah, okay, it's probably about the same. It's sitting right here at around 24,000. Again, it's this level, right? It's this is your last lower high come in that bearish market structure. So breaking out above that should be good to go. Okay? Here's what's going to happen. Nobody's going to buy really here. Retail, you're going to have a lot of people talking smack or whatever. Retail does not buy here. They won't buy here. They will continue to tell you that it needs, if it rallies up here, they'll say, oh, it definitely has to get rejected here. It definitely has to get rejected here. It definitely has to get rejected here. It's definitely going to get rejected here. And what they mean by rejected, they're going to say it's going to come down to their 12,000, 10,000, 3,000, whatever levels. Same exact thing that happened here, guys. Okay? If price breaks out here and heads up, you're going to have the same mentality they had along here. And they're going to be scared. The further it goes up, especially the quicker it goes up, the more scared they become. As traders, as human beings, to get in, right? Because now they're confused. They were so sure it had to go down further, and it goes against them, and they're like, what am I going to do now, right? I can't get in because it's going up. And then by the time it starts to get up there, they're like, well, it's too late to get in. And then you can see in volume where they do get in, right? They get in here, and they got in here. Along the way, look at all this move, guys. Look at this. This move from the December 2018 bear market low to 2019 June high, almost 350%, right? Look at the volume. There's no real volume. There's a spike here, which then went sideways. There's a spike here, which then kind of pulled back. And then there's this huge spike up here at the top. This is where retail got in. That's where retail got in. They didn't get in really here. They didn't really get in here. You see the volume dropping off, right? It's all staying low relatively. A little bit, but not much, right? Some retail. But most of this rally you're going to get is going to be from your big players. They're the ones. And so many times retail looks at something and say, well, how can it go up? There's no volume. How's it going to go up? And they think in terms of, I'm not going to buy here. Who has money to buy here? I lost my money. I don't have money to buy here. There's nobody that's going to be able to buy here. There's always money out there, guys. There's always money waiting to come into the markets from your big players. They are the ones that buy at the lows, not retail. Retail buys at these significant levels. That's where retail buys. Retail bought all up in here. Look at this. All up in here. See that volume? That's all retail buying and big players selling to them. How do we know that's big players selling to them? Because price went down. Retail does not, each individual retail player does not hold enough to really do anything in the market. And they all work independently. Your big players, your big professional players, they hold a lot of the asset or a lot of dollars, a lot of currency, whatever it is, and they deploy it at once. That's how we know these are big players up here selling into retail. This is how we know here this is big players buying and retail selling. Okay? Let me see here. Kemozabi, what's up? He says, I love to counter trade the definites. Yeah, definites are tough, man. Let me see here. Trying to catch up with you guys. Hank says, ES is going down. Crypto will join. That's not a guarantee, but that is what I think will happen. That's what Hank says. Yeah, so potentially, let's go ahead and jump out here. So anyway, yeah, again, if you're following me on Twitter, or if you haven't yet, follow me there and look through my feed. I've got some great explanations on the weekly and monthly as far as volume and price action go. And then, here and here, and explaining why maybe, that could add to that potential bottom has been forming since June narrative here. This becomes a terminal shakeout. We got a little bit sideways range here, right? Which is what we get at terminal shakeouts. Springs drop down through the range low and immediately pop back up and close in it. Terminal shakeouts are much higher volume, right? And they tend to form a small range before rallying back up impulsively, right? And so we're going to see if we can get this. There we go. So yeah, it's kind of what we're looking at here, right? Again, I think this is what that 200 MA there. You can see that it's running support here. Again, the idea that this is running, that this is demand here, holding it up, right? Let's see. So that's what we're kind of looking at there. ES, Hank was saying, right? What's going on with ES? Oh man, let me see. So that's what I'm looking for there. Let me see. Okay, here we go. And so for ES, as you can see, I've got I've got this possible count here that says maybe we've got a leading diagonal coming off here. And we're looking, as long as this continues to drop down below wave 4, we've got a target right here at around 38.85. And then we'll look here at the daily S1 pivot around 38.26, right? You can see that on the 4-hour, we are almost oversold. We are just about bottomed out and oversold in Stoch RSI. So, again, you're going to have this right here is, you've got this demand structure right here. Coming in right here. And that's where price is kind of finding some support at the moment here. See, every time it's kind of hit this, it's bounced out, right? So we're going to see if we can get that rally back up. We'll see, basically see if the daily pivot holds this support is what we want to look for. There are some other possibilities on this count. It's really just a lot of overlap. So there's a couple of different ways to potentially look at it. So for right now, again, looking at maybe as a 1-2, right? If we look out here to the daily has almost reset down and oversold on Stoch RSI, right? Right now, the daily is printing a hidden bullish divergence here. Now, if price is to drop down below this swing low there at 3941.25, that's going to invalidate it. But if we can get a rally off here and rally back up, we've got hidden bullish divergence on the daily, potentially to rally higher, right? Now, again, ES, the NASDAQ, they haven't done what the Dow has done. Remember, the Dow so far has broken out above its mid-August swing high here, right? Again, when we're talking about bearish market structure, high, low, lower high, lower low, lower high, lower low, right? So if you break out above this lower high, that breaks that bearish market structure. Now you can see here, remember when I told you earlier that if it doesn't guarantee it's going to continue up? Well, because here we have it here, right? So high, low, lower high, lower low, lower high, lower low, right? You broke out above it. It broke this bearish market structure. But guess what? It then bailed down lower, printed another new low. And so this whole thing becomes the bearish market structure now. Okay? So it doesn't guarantee that you're going up to the all-time high. But as those things are, it's something that you look for. Because if you get that, then it increases the odds that it's going to rally up from there higher. Okay? So what we want to see is confirmation with the S&P and with the NASDAQ on breaking above their mid-August swing highs. If we can do that, that's going to confirm the Dow's breakout higher. If we don't get that and they don't make it and the Dow is already broken out, then that's a non-confirmation and would suggest that we're going to go lower, right? So when you're working with indexes and stocks, you want to look for confirmations or non-confirmations. Non-confirmations often mean reversals, right? So if they can't get up there and break out, instead they head down, and they can't break out above that, that's going to suggest that we're probably coming down lower here. If they do break out with it, that increases the odds significantly that we're going to go to a new all-time high. Okay? So that's, generally what we're looking for as this continues to play out here, right? Excuse me. Let me see here. Yeah, okay. So that's kind of what we're looking for there, right? We're going to see, do we get that move down all the way here and then rally up? We're going to see if we can find support here and then rally up. Because if we do find support here and we do rally and break out higher, we're going to have to change this count here. And that's okay. We'll look for a rally back up. If you get support around the pivot and you break out higher, you're going to look for an initial target of the R1, right? Along the way, you might find resistance right here around 41.33, which is where you found resistance previously, that high volume node. Okay? So that's what we're looking. No guarantees either way. We need to see follow through. We need to see price take steps, or in this case, the index takes steps that it needs to take to make it more likely than not that it's correct that it's going to break out higher, or the other way to say it's more likely than not going to do that, and we're going to head down lower. Here's the thing, guys. If we can't do this from where we're at, this breakdown here should be pretty extensive. It should hit hard. It should be a strong move down. Stronger than this move down here. Okay? Because that'll be like a third, that'll be basically this here. 1, 2, 1, 2, right? It'll be a third of a third wave heading down potentially. Because you go 1, 2, 1, 2 here. So 3 of a 3. That's when everybody goes, oh crap, it's not going to go up. We need to jump in here. We need to cover our longs, get short. And your third waves will give you the biggest volume, usually, because of that reasoning. Okay? So, yeah. Let me see here. You can't move something based on supply and demand. I don't know if Hank's talking to me or somebody else. It doesn't matter that the S&P is an index, though. It's telling you what those stocks as an aggregate are doing. So yeah, in this case, this is actually the future. So there is volume on this traded futures here. This is actually the futures here. So yeah. Do I have any thoughts on crude? Yes, sir. I'm about to bring that up. Let me see here. Let's see what we got here. Oh, nope. There we go. Nope. I always got to remember what I label it here. I should label it CL, but I label it oil. See? There we go. Oh, man, yeah. So big drop down here. Was trying to give it some room. It seems like they're becoming overextended, though. Last time I looked, I believe oil was in contango with oil producing companies. And so this gets really interesting in what's going on here. So I'm the guy, obviously that, was talking about the possibility that we're topped out here, we're heading down lower. And if you need a narrative, with the Fed coming up and saying, Jerome Powell being quite dovish last week, right? Especially compared to all his hawkish rhetoric that he's had for the months leading up to it, right? Significantly different tone and things he was talking about this last week, right? So that's because, as he mentioned, they don't know the effects that all these significant rate hikes have because they're lagging effects. They say that we haven't seen yet in the markets and the economy the effect of all those yet. So he's saying we don't want to crash the economy, which is all his pushing toward, potentially a 50 basis point rate hike, right? It's not, everybody's worried about pivots. You don't need pivots, you need slowdowns, guys. If you get slowdowns, markets are forward looking and they will then trade according to the slowdown, not to the idea that there is a pivot, but what the slowdown means potentially in terms of pivoting, okay? So there's that difference between what, again, new retail traders tend to think and what actually works, right? So here's the thing. If the FOMC feels that way, right, and Jerome Powell feels that way, then they're concerned that as he said, that there's a slowdown, there's going to be a slowdown in the market, right? Now he still thinks there's a possibility of a soft landing. I'm not so sure I agree with that, but nonetheless, the idea is that some sort of recession is probably coming in or something pretty close to it, right? A slowdown of some sort. So if we have that, then oil should necessarily continue lower, right? As that happens, because there's less demand, right? A slowdown in economic activity means there's less products produced, means there's less travel done, which means there's less delivery. So there's less need for oil, right? Remember, oil isn't just your car, your fuel in your car, or the fuel in the delivery vehicles, right? It's travel, airplanes, huge bit of it. Airplanes and cruise ships, huge contributors to the value of oil, right? Whether it's up or down. The collapse that we saw in the May 2020 contracts was due to the fact that your big players like, airlines and cruise ships, all of a sudden didn't need the oil, right? So they weren't going after it like they would normally do at that time in preparation for summer because we had the lockdowns, right? So if the economy goes down, it's possible we could see this continuing lower. Now, does that mean that has to be the end-all, be-all top? No. But, the reality of it is we closed for the first time. Well, we dipped down and, for the first time ever into negative territory, right? First time ever on the NYMEX has oil gone down in the negative territory there for those May 2020 contracts. We went down to like negative $42. In other words, people who add oil were paying other people $42 a barrel to take that oil from them. Why? Because WTI, West Texas Intermediate, right? It's here in the U.S. The contracts, you have to take the oil. You can't just pay off cash. You have to take the oil. And the problem was at that time, so here in the U.S., I don't know if you guys know this, but here in the U.S., there's oil pipelines all throughout the U.S., okay? And that's how oil gets moved, okay, from the fields into whatever. And so Cushing, Oklahoma is the hub. And that's where people usually store oil. Well, it was 100% taken at that time. There was no space there, right? Almost something like 80% of the world's oil holding area, right? I can't think of the word. Storage was actually claimed at that time as well. So people that were actually taking oil, they had to send trucks to pick up that oil, and they had to find, for pretty much all of them, they had to find tankers that they could stand out. Now, if you were following me back then, I said this is what was going to happen. People were going to make a huge bit of money by being able to being paid to take those oil contracts. If they could find, some of them were going to be able to find some oil tankers. They were going to take it and put it out there for about a year or something and then come back on the market, right? So what does that mean? Well, heck, they're getting paid to take it and then they can sell it back when it's back up, right? So what have we done? We closed it around $38 or so, negative $38 or something like that in May 2022. And we've gone up ever since. Which means if you took oil at that time and you were paid to do so, $20, $30, $40 each barrel paid to do so, not only did you make money on that end, which may have covered your transportation and storage cost, or at least a good bit of it, but then you're able to sell it for pure profit as price rallied. As price rallied up to $20, $30, $50, $80, $100, $130, right? That was the game, man. Some people did really well with that. So now we're sitting up here, we're going, okay, potential double top here. If this is a double top, then we're looking at a target of what? Of about, because we had the breakdown here, right? Right here. Look at what happens, though. Let me see, is that target? Yeah, okay. That target is right here at around my EQ down here. Right around, oops, what the heck happened there? Try this again. Oh, come on, there we go. Right here around $67. You can also notice that if we bring this over here, again, remember what I was talking about earlier with these, the price by level here? Look at that. Just above that, about $4 or so, is the absolute most important price to the market over the last few years, right? But look at how big, look at how all this is here. That's a lot of support, right? Now, if you lose that, all of a sudden you're starting to look down here, you know, maybe around 53, maybe down here around 42, 40, that kind of area, right? But as long as you can find that support in here, you're good. So what are you looking at? Well, if you're trading oil, what you're looking for is an impulsive breakout above the daily pivot here. If you can get that, that gets you an immediate target of this area right here around the R1, right? Right in this area where you got this double top. If you can clear that, to me, you see how that's the support resistance there? To me, it means we're probably going to break a new all-time high. But at least you should be looking to rally up into this 110 area to 120 area at least. But I think if you take out this area impulsively, this kind of $92 or so, really, you know, and then you get that $100 psychological level. So if you can break on impulsively above those, I think we go to a new all-time high. Are we going to 300? I don't necessarily think we're doing 300. But we are going to, you know, head up there. In terms of this, to me, that would make this a wave 4. Okay? And if this is a wave 4, excuse me, then based on the height of that, we got about $166 would be the wave 5 target. Okay? If this is to be a wave 4 here. Okay? We jump over here to the weekly. Let me kind of get some of this off here. There we go. Remember I said $67? That's right there. That's right here in this weekly demand structure right here around that weekly pivot. Now, this weekly pivot, these weekly pivots are going to change on January 1st when the new year comes in. Okay, UTC time. These pivots will change. The weekly pivots are based on the year, okay? So we'll have to see where that comes. But right now, that's where we're looking. So again, makes a lot of sense, right? You can see that worked as resistance and support here as we went through, right? Makes a lot of sense for that area. Let me see here. Let me kind of catch up with you guys here. Okay. So, yeah, so this is what we got, right? So, I mean, this is a pretty clear downtrend here, right? So it's what we've been looking at since we made this high up here. If you guys have been following me, you know we've been looking at that, right? But definitely coming into a very interesting area here. Again, if we look all the way left, guys, always look left. If you're not looking left daily, every time you look at the chart, what the heck are you doing, right? Oh, I hit that twice now. So, I mean, you know, we're kind of looking at this area here all the way across, right? So again, the idea that this works as this resistance support level, pretty good there. But here, if we're pulling all the way over here from 1995 to now, highest, most interested area, $53.50 kind of area, right? The highest volume node is right here. We're just coming into the top of this. It just gets more, the market is more and more interested in this area, right? Heaven forbid we lose that 45, though. Look at how this drops off. So yeah, if we put this whole chart in here, again, you can see that the most important level of the market's right there around $52. Provided resistance, support, resistance, 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 support, support, going through there. So a lot to be said of that, right? And of course, this was that big May contract, because this is the futures here, guys. With that, now the difference between WTI and Brent C is that Brent the contracts can be settled in cash. You don't have to take delivery of oil. WTI, you have to take delivery of oil. The other thing is, because Brent is basically most of the, it's coming out of the under the ocean floor, right? It's already on tankers. So unlike WTI, which is sent through tubes, basically, and held in storage facilities, right? Brent, when it comes out, it's stuck on tankers already, so it's there. So you see the differences between the issues you might have with WTI versus Brent if you were actually trading either one there, right? Now, right here, you can see that right here, it looks like a pretty good falling wedge here, right? Now, in terms of that, if this top is in here and we're coming down lower here, I mean, if we look at this, this looks like 1, 2, 3, 4, 1, 2, 3, 4, 5, right? So you get the move down here toward around $70. That looks like 5 down. And then I would expect a rally at least up to this $90 area. I could see us rallying and trying to break 100, but when you're doing Elliott wave, wave 4 or wave 2, your initial target is always wave 4, the lesser degree. Again, if this is 1, 2, and this is 3, 4, then this is 5. 5 should rally back up here to around that $93 area, at least. And like I said, I could see it potentially, because it's so close to get to the 100, which is right here, around this support. I could see it potentially reaching there. But overall, based on the weekly here, it does look like we're going to continue down a bit lower here. And so again, on this weekly here, you have this demand structure in this lower wick here, right there around $68, $69. And of course, the weekly pivot is just above that. So I would think probably right around there. The other way we can look at this, let me make a copy here real quick so I don't ruin this chart that I have for our members. And this is the zoomed out look, not this zoomed in look, right? So again, the zoomed in look is based on that, but I think really, you kind of zoom out to the other one and you get a lot of good ideas here as far as this goes. But here's what we look for. Yeah, so right here it looks like 1, 2, and then 1, 2, 3, 4, 5 gives us 3, 4, and 5. So if we've got 5, that gives us a 67, 61 kind of target area. And if we zoom out to the weekly, dang it, didn't come in the weekly. Let's see how that comes with the weekly pivot. Yep, right into this weekly demand structure right here. Let me see, a little bit lower, right about there. You can see that that's almost right there at the EQ of that. So yeah, I mean, if I'm looking this out here like this, I think that's probably $67, $68 is probably a pretty good target. Now, could it get front run? Sure, it might even get front run at 70, because 70 is around 10's number, right? Psychologically, people are drawn to it. And that would put it just prior to the weekly pivot here, right? Puts us right into this demand structure right here. Oops. A little bit low there. Yeah. 70 will get you right about, right in here. So right into that demand structure there, right at the weekly pivot. So yeah, you're welcome. I think, again, is this maybe an ABC down? I mean, it could be. But here's the thing, guys. This would be one wave up from that low, right? So, way down there. So only coming down. I mean, it's only 46, 47% drop off the top. I think, again, I think it'd be we get an A here, we get a B up, and then we get a C down toward maybe this area here, right? So if we, let's say we were to hit this target down here, right? That should give us a 1, we'll go 2, or AB, I guess is what I should do, right? This is going to be ABC. A, B, and you can see down here. Now, you can see that right here at this wave 4, it's a 38.2. Right here around 100 is the 50%, right? Those are the two targets I would be looking at. So yeah, I mean, it makes a lot of sense. Around 91 or around 100 after, you know, looking toward this 67, 68 area. That would be what I'm looking for. And then we'd break down lower. And like I said, I think, you know, probably come on down here. I think this is a good target down here. Maybe that 53 area. Or even down here around, I mean, even this would be, I mean, look at this right here with the support resistance right here. Right around $43 would be another lower down target, be good. Let me see what that does in terms of the high volume node here. And 43 takes you just toward the bottom area of this node. So maybe not quite there, maybe get to 45 or something like that. But I mean, that's just generally based off this structure on the weekly time frame. That's what I think is probably the highest likelihood of what will happen on that. Move down, move up, then back down like that. Let me see here. So that'll be what is that? Oil there. Let's see here. We looked at S&P. We looked at oil. Looked at that. Oh, let's look at the dollar, right? Let's look at the dollar. Dollar futures. Let's see. Is that the right one right there? Okay. Yeah. So again, anybody that's bullish on the dollar right now is likely bullish because this right here. You're getting a bounce right here at this previous. This is 2016, and you finally broke out here in 2022. So you're looking at about a 6-year resistance. You're getting a bounce to support. So that's why they're looking. That's why they're kind of excited about it, and you know it makes sense, right? But if I look at this, I look and go, okay, well, on this large time frame here, on this weekly, it looks like 1, 2, 3, 4, 5. So, and that's a pretty long third wave. So usually when they're really long like that, I tend to default to the idea it's a 3 rather than a C. Because C waves, we usually want to see, you know, first target's usually 100% of wave A, and then we go to 123%, right? Once you start getting around 161.8 or further, more times than not, it's going to be a wave 3 instead of a wave C. There's still times where it's a wave C, but the odds increase toward it being a wave 3, right? So if we were to go on here and kind of measure this out, it's a 2.0 right there, right? Now, the other thing that we look at here is maybe this is 1, 2, 3, 4, 5, right? So what you end up getting here is a 1, 2, 3, 4, and then 5. Let's see here. If we were to measure out wave 4, 1618, just a bit lower here, around 103.5. We actually got down to 103.935. Potential tweezer bottoms here printing on the weekly. But again, this is the weekly. So we have to wait until Friday, the close on Friday for the weekly to close, right? So, you know, and if this is 5 down, again, my first thought is we get a rally up to wave 4, which is daily pivot, right? Let's kind of zoom in here a bit. Let's see here. So, yes, that would be like a 1, 2 here. And then 1, 2, 3, 4, 5 maybe. Now, the other thought would be obviously that this would be a 3 here, and this would be an A, a B, and a C as a flat, as an expanded flat. But again, you can notice it's just 3 waves down here, right? So when we're looking at that, I guess we could, I hate, so the idea here is if we look here at the first one, we can see it's 3 waves down, right? It's one opposite color candle there. So it's, ABC, right? Then ABC up. Then you have an ABC down here. So either this is 1, 2, 3, 4, 5, and then up ABC, or it's 1, 2, or 1, A, B, C. But that looks like 3. So I think maybe this could be 1, 2, and then 1, 2, 3, 4, 5 gives us 3, 4. But then here, 1, 2. I mean, it could be 3, 4, 5, or it could be 3, 4, 5. See, so there is the likelihood we continue lower here, right? Especially since the daily, as you can see here, RSI has not even dipped down and oversold yet. That's something you want to look for, right? So we watch here and we go, okay, well, what's going on here? Well, we've got potentially an ABC, right? But this swing high has to hold as resistance. You have to get a rejection and send it back down below this, go down, because then you can have a WXY correction, right? And if this is a 1, 2, and this is a 3, 4, and this is a 5, well then 1, 2 to wave 4, which is where we're at, again, makes sense, right? So we'll wait and see. If we break out here, again, if we do break out here, you want to look at your R1 pivot, swing high right there, but you could potentially see it going all the way up to the daily pivot here, and that basically potentially just gives us a 1 down and a 2 up. Now, if you break out impulsively above this daily pivot, then I would step back and go, okay, maybe there's some sort of ABC going on here, and maybe we do rally up there toward, that this is just corrective here, and we move 1 more up. If we move 1 more up, that means this is 3, this is 4, and we have 5 at around 121.5, 121.445 here on the futures there. Okay? Is all this making any sense, or you just guys like, what the hell is he talking about? Again, guys, you can always look back at the video because I do talk about a lot of different things. Again, guys, I am literally a student of the market now. I hate the word literally. I tell my son not to use it all the time, and there I was using it, but I do. Ever since I decided a few years into losing a whole bunch of money when I first started back in the 90s, I made that conscious decision to become a student of the market. Which is why I guarantee I have spent more money than any of y'all on different systems and techniques and courses and education, not just on trading, but on markets and structure and macroeconomics and all that stuff, because I'm just one of those guys. If I'm going to know, I want to know. I want to know it all. And so, the one thing I found with all this is that usually, for the most part, there's very few. In the grand scheme of things, for the more well-known systems, there's very few actual scams out there, guys. But the problem is, as new traders, you rarely have the ability to really utilize the system as it should be because you don't understand everything you need to understand about how markets work. You don't have the experience in the market to understand that feeling. Each market moves differently. If you're trading FX, if you're trading currencies, there's a different feel to that market than if you're trading Bitcoin, which has a different feel to the market than if you're trading stocks, which has a different feel to the market than if you're trading precious metals or oil, right? So all these things take time. They take experience. There's nothing that will obviate the need for taking time just in your seat, right? Just time in the market, just to get that feel of the market. But yeah, I mean, that's all to it, right? And so what I found is, again, all these systems generally take you to the same places. Wyckoff, Elliott Wave, pivots, they all pretty much take you to the same place, just get you there a different way, a different way of looking at the market. But most traders, don't have the patience. They refuse to have the patience to take the time to put in the effort required to get where they want to go. Here's the one thing I've noticed over the years, guys. Those who excel at things, those who excel at one thing usually excel at many things in life. And they do so because of their discipline. They've developed a habit of learning how to do a thing correctly and then practicing it correctly a numerous, uncountable amount of times. Okay? That's often what separates a losing retail trader with somebody who is consistently profitable. It's just it's not that the person can't do it. It's not that the retail participant can't do it. They refuse to do what they need to do, how they need to do it. Does that make sense, guys? They make the conscious decision that they're not going to do things the way it needs to be done. And so, you know, and there's nobody out there that can force you to do it. There's nobody out there that can force you to do it the way you have to do it, right? By the way, guys, the other thing here is maybe this is a leading diagonal here, right? A, B, so 1, 2, 3, 4, 5, right? So this becomes like a leading diagonal as a 1 or an A, right? But here's the thing. If this is a leading diagonal here, right? And you get the breakdown you would expect through the support there, right? If this is that right there, then we should have further to go. You can't have an overlap here because you have an overlap here. So if this is going to be, say, an ABC rather than a 1, 2, 3, right? See down here? You have a leading diagonal here. You can't have an ending diagonal here. So we would be looking for further downside on something like that. So yeah, there's a couple of different ways to look at this. So rather than say, listen, these are the things you have to do, it's usually just easier once you have these ideas and you look at where it's at and you go, okay, well, we're coming in sideways between the pivot and the S1, usually looking to reach the S1 and then rally up to the pivot. And you know, if you think this is down, it's going down further, you expect a rejection here at the pivot and break down further. If you get an impulsive breakout above the pivot, then it signals, okay, well, there's a good chance we may be breaking out to a new higher high. And so you can do something as simple as that when you're using pivots. By the way, in the LMT program, I'm going to give you guys all my little secrets and everything about pivots trading too. There's so much about it. You know, I barely skim the surface here when I do this with you guys. But just so many ways in which you can use it to really kind of figure out what am I actually maybe doing here. You know, with what I'm looking at, especially when you get those areas where you're like, man, I don't know if that I'm not sure that's right. And then you get there and you go, okay, find confirmation via these things that we know about pivots and the way they work. So yeah, a lot of that in there as well. But, you know, right now, potentially a bottom. We'll look and see, you know, again, what I was looking at and potentially even up to the pivot. If we were to break out impulsively there, then I'm open to the idea we may be rallying up to 121.5. But especially if we get rejected, you know, right up here, right there at the pivot, break down further, that just keeps this whole idea of that we're heading down further alive. And in that case, I'm looking, you know, specifically these areas. I'm looking at this. This is right below the pivot there, 103 to 101, I guess. 101.75 or so to 103. If we break down through there, I'm looking at this orange range here, which is basically 95 to 97.5. And specifically within that, I would look at this 95.66 to 96.735. If we get down to this point, the odds are likely we're headed down further, right? Now, if I'm looking at this, I think, man, I think there's a good argument for this being distribution. When we're looking at actually where the volume is and everything in there on the breakout right here. But it really kind of depends what happens here. If we're dropping back down here, the odds are significantly increased that we're going to break down. And Hank's going to get his 80s probably lower. But if we can hold support in this area here and rally back up, you know, again, I think it makes a good argument for the idea, you know, again, we're going to head up here and then we'll pull back toward this area again and then we'll just kind of break out higher. If we're doing that, guys, that, you know, again, that's the dollar. It continues to strengthen against the rest of the world, which means that things are, even if things are going bad everywhere, they're either a lot better here than anywhere else or they're a lot less bad here than anywhere else. That would be why we'd see that. So I really don't want to see that type of thing happen. I would like to see the dollar pull back further. It just, in terms of what it means for, everybody else in the world, I think it's important that it does, because the more that thing continues to rally, again, we're exporting inflation to the rest of the world, which makes everybody else's lives infinitely harder and potentially collapses the whole global system, depending on how bad it really gets. So my preference would be that the top is in and we're headed down, at least for a while. That would be my preference. We're at mid-80s. It's just a matter of principle by now. Oh, man. In case you guys don't know, Hank and I had a little thing about that back over here when we were talking about potentially the bottom versus where we were looking there further. That's why I keep mentioning it. It's a lot of fun. But it's now become this inside joke that if you were there or you know about it, it's not so inside, I guess, anymore. But yeah. Great reset, Andrew says. Yeah, it would be. And everybody talks about, oh, we want this to happen. We want this to happen. Guys, you really don't want that. You really don't want that kind of thing to happen. People are going to, in a situation like that, a lot of people are going to needlessly die, be hurt in a lot of ways. It's going to be a miserable time compared to what you're used to. You're used to a very fluffy life right now, right? In general, compared to what it would be, compared to the way life was, 100 years ago, 150 years ago. Yeah. I don't like that. Let me see here. Anyway, so that gets us 12:30, guys. Let's jump back over here to Bitcoin to see where we're at there. It's having trouble still. We're still kind of pulling back here locally. Depending on how you want to look at this, this is 3 waves down, it looks like, off this rally. And we're finding support right there on the 200 EMA, right? Here, it looks like maybe an ABC, but maybe 1, 2, 3, 4, 5. So, no real clear kind of count on that. Yeah, see, if I look at this, looks like 1, 2, 3, 4, 5 leading diagonal. And then A, B, C. So you get like a 1, 2, and then a 1, 2 here. But man, we're getting close to that low there. And so, I get really cautious when you get really close to the invalidation area. Because most of the time, when you get, like I said, around 85, 90% retracement, most of the time, price is going to continue to break down through it. Occasionally, it'll rally back up, but most of the time, it'll continue to break down through it. So I get really cautious around those when you get those kinds of big pullbacks there. So, yeah, we'll see what happens here, guys. But even if it does, right now, we're just looking at a pullback. Again, coming off this rally off the, geez whiz, over here, right? So this is a rally. We had a rally that lasted from, what is this? Can't get to market. There we go. November 21st, all the way up to December 5th, right? No, November of, November 21st, yeah. And so in that time, in that, whatever that was, 14 days, 15 days, couple of weeks there, we've had this rally up of about 12.5%. And a lot of people missed that. And they missed it because they're scared about it potentially coming lower there. But here's the thing, guys. If you're a trader, then you're a trader. You're looking for shorter term opportunities. You don't really care what the market is overall. It's good to know the higher time frame trends. But if you're a trader, especially if you're a day trader, there's tons of opportunity going against the trend to find it, as long as you have intelligent entries. Again, over here, there was bullish divergence, right? This is the hour chart. Bullish divergence to set off. That set off the move up. There's no reason, if you were watching this and you saw that you shouldn't have been in, right? And even after it for a little bit, again, people get scared that if they don't get things right when it happens, that they're just not going to do it, right? What if you had bought on this pullback here, right here, just into the wick here? If you bought there, I mean, my gosh, guys. Let's say you did the close there, right? You just put your stop loss right below the swing low there, and you put your target up here toward this next area, right? And so right here you have this great area of support. I mean, you could have just done that. 1-to-7 risk-reward ratio there, guys. Risking $1 to make $1.70. And you see it went higher, right? By the way, if you're in the LMT program, I'm going to show you the trader's greatest. Our tier 3 people know this already, but their greatest stop loss technique, right? And you guys be quiet. Don't tell them what it is. But yeah, we're going to teach you guys that as well. But I mean, you know, a lot of people didn't want to trade this right here, right? They missed this. They got the pullback opportunity and were afraid to trade long there because they were scared they were going to lose some money. If you're using proper risk management, this loss here is nothing. It shouldn't have you worried. But again, as traders, you're scared to lose money, right? But you're going to lose money as traders. The key is to look for the higher confidence entries, the higher confidence opportunities. This is a higher confidence entry. It does not guarantee that price is going to rally, but it increases the odds significantly when you see it. This bullish divergence and oversold, especially on the hourly time frame, right? Sure, from here it could have gone down, sure. And if you're using proper risk management, it would have been no problem with the loss. It would have been tiny. But by not taking that chance, you lost the opportunity to make almost 2-to-1. Or, again, with the stop loss technique I'll be teaching, you actually could have rallied this. Where would you have gone? Using the technique that I'm talking about, you would have been up through here. So you could have got down there. So your actual return would have been 3.73 risk to reward ratio by the time it got there. So you would have made $3.73 for every dollar that you were putting in that position that you were risking. So if you were risking $100, you would have made $373. If you're risking 1,000, you would have made $3,730. If you're risking 10 grand, you would have made $3,730, right? So yeah, I mean, you know, again, guys, a lot of trading is just about understanding. And when you understand how markets work and whatever, it doesn't mean that you know what's going to happen definitively every time. There are no guarantees about price action, right? But what it means is you have less fear. When you understand that things happen in a certain way, even if you get that wrong, you still, the fact that you know that there's a predictable manner in which way the market moves means that you don't FOMO in. It means that you don't get scared when something goes against you because you're like, oh, well, looking at that, I knew that if that happens, then we're looking at here, and here's where the stop loss goes, you know? Fear is a huge motivating factor. Two largest driving factors, guys. I'm gonna leave you with this, okay? The two largest driving factors of human beings are greed and fear. And of those two, fear is exceptionally more important than greed. It's much more it's much stronger than greed for human beings, okay? All right, guys. So, hey, there you go. As always, remember, the only thing you control in the market is how much you lose, okay, guys? So, as always, work on that risk management. It is the single most important thing you're ever going to do as a trader, day in and day out. I'd say ask Caroline, but she's probably got some other excuse for why her no stop loss thing should have worked, right? All right, guys. Y'all have an amazing day. If you're in Discord, I'll see you guys over there in a bit. Other than that, guys, I'll keep you updated. Again, I'm on more and more shows now, and I try to keep you guys updated. Scott's show this morning was a last-minute thing last night, but always a good time being able to share stuff that I know and things that, you know. If anything, guys, if I can just get you to understand how important risk management is, and then to understand that the only guarantee in trading, as Fiboswani would say, is that you're going to lose money at some point, and get you off those absolutes, all those other absolutes, and price has to do this, and you have to know where price is going, all this thing. If I can get you off all that and looking at it properly, understanding it properly, then I've done my job, and you guys are going to have a lot more likelihood of being successful. As long as you continue to think the other things, though, you're going to find it a great hindrance on being able to do things you want to do. Okay, guys? All right, guys, y'all be great. And, man, Friday, 11:30 a.m. or 11 o'clock a.m. Central Standard Time, we'll have our show on here. And, guys, I'm working on, I don't know how good a host I am, but I would like to start bringing people on. And so I don't know if I can get something figured out for Friday, I'll do that. Yeah, man. By the way, go to themarketbreakdown.substack.com and sign up for the newsletter there, weekly newsletter, looking at the markets, explaining my thoughts on how they all interact and any big news events that go on that week and how it might or might not play into the markets, especially if my thoughts are different than what the crowd generally seems to think. And it's free. So you can jump on there and do that, okay? All right, guys. Y'all take care, trade safe, and I will see y'all on Friday.